Hi everyone, Jonathan Wu here from SWU Online Invest with our October 2024 updates. I wanted to quickly start to talk about the current macro environment before we deep dive into the portfolios. Firstly, outside of Asia, we haven't seen any major significant changes to the environment since we last provided a formal update. But there are a few things that we want to highlight. First of all, with the US, there is an upcoming election in early November, which obviously has been a major talking point, but we don't believe it's going to be a significant market disruption regardless if it's Republican or Democrat. The only thing that we see that could be material is the external policy stance, because Trump is more protectionist and isolationist versus Harris, which seems to be still protectionist but not as severe. That said, the other part of the story is US rate cuts, which we've started to see flow through to the system. We don't expect them to be super aggressive going forward because the economic activity and unemployment levels in the US simply aren't that bad, and we also don't expect a rapid deterioration in the US economy. If we then move to China, we've seen the government launch a series of very strong stimulus measures, but mostly around the monetary side. What we are waiting to see, though, is more of the fiscal type of stimulus, which needs to be more substantial to give a further boost to markets. Markets have reacted positively so far because it has been quite comprehensive, but it's still a wait and see that we need to monitor. Finally, here in Australia, inflation has tempered somewhat, but it's still stubbornly a bit higher than what's needed, and so we don't expect rate cuts to be on the immediate horizon. Most economists are expecting maybe the second half of 2025 is when that could happen, but you can clearly see from the Reserve Bank's commentary in recent months, they are definitely tiptoeing very carefully around this because they don't want to cut rates too early. So that's all we have for the macro update side, but pleasingly, looking at portfolio performance, all four funds for the last 12 months have achieved double-digit returns, net of all fees. With the Asian All-Stars portfolio, it's been the strongest performing option over recent times given the latest stimulus measures coming out of China, and this has provided a significant boost after a 4-year lull. This now brings the portfolio's total performance after fees over the last year to just over 17% and over 12% per annum over the last 2 years. While we have had to go through some levels of volatility in recent years with our overweight position in China, it has certainly now started to pay off, and the market has gone from extremely low valuations with muted earnings to very low valuations with discounted earnings. The IC is comfortable with the portfolio and has decided to maintain its positioning with a deliberate overweight to China, with over around 25% of the portfolio. The portfolio overall is fully invested with only 1.5% cash sitting in the balance sheet. With the balanced Beam portfolio, it has registered just over 10% total return net of fees over the last 12 months and similarly over the last 2 years, which shows very consistent performance for this portfolio. And it's a great option for investors looking for the appropriate balance of growth and defensive assets. The portfolio is well diversified and has built up some cash, while the IC believes it is now prudent to deploy. We've decided to top over our current exposure in Atlas Infrastructure unhedged by 5%, which is being funded from the cash position. Other than this, the IC believes that the portfolio is well positioned. With the Growth Engines portfolio, it's generated just over 9% return net of fees over the last 3 months and just under 16% for the last 12. This is partially due to the overweight in China, Australian small caps, and market-neutral Australian equities. We still believe small caps both locally and abroad offer superior risk-reward valuations compared to large caps, even with the recent rallies taking place. Given this backdrop, the IC has decided to remain in small caps, but switch the portfolio's 10% exposure from AFIR's Australian equities listed vehicle to Ausbil Global Small Caps. The key rationale is that there is a larger universe of stocks to choose from overseas, as well as concerns around the stop-loss philosophy within AFIR. Other than this, the IC is happy with the current positioning. Finally, with the Income Booster portfolio, it has achieved a solid 13% net of fees return over the last 12 months, while maintaining a portfolio cash yield of over 6%. The portfolio is well diversified with an overweight to Australian dividend income, And recently, the IC decided to introduce a new liquid fixed income strategy, being the Coolabah Floating Rate High Yield Fund, which provides a leveraged exposure to primarily Australian large bank bonds with strong income. The strategy has a 10% weight in the portfolio as it stands today. The portfolio has, on average, also been holding a higher level of cash, with the IC waiting for opportunities to move over time. And given the RBA is looking to drop rates some point in the future, probably from the second half of next year, we've decided to increase the weight to the Janus Henderson Tactical Income Fund to 10%, given the fund has a cash yield of around 5%, and if rates fall, there are also ample opportunity to make some capital gains on top of the cash yield. Another 2% cash has been used to top up the exposure in the Antipodes Asia Income Fund, as that strategy is offering an attractive 6% cash yield and a 9% yield to maturity. Other than this, the IC is happy with the current positioning. So that's all for this month. Thanks very much for watching, and if you have any questions, feel free to reach out to us.